everyone. This is Reed Stiles, co-founder of simplepetro.com, where you can appraise the value of oil and gas production in as little as 10 clicks. I'm here to give you another live demo. I'm going to go through all the steps and show you how I do an evaluation. And this is something that you can easily replicate on our platform at simplepetro.com. So follow along with me. Once you get to the Simple Petro homepage, there are two things to click on. One is another demo video. That's a long form where I explain all the inputs. And then click right here to start your free evaluation. Okay, so once we're on the input form, the first thing to put in there is your email. So I'm going to put in my email, simplepetro1@gmail.com. Okay, now I want to show you where I got the information for this project. I went to plsx.com. I went to their listings service, and I went down here and I clicked on overrides. So I can click on producing. You'll see all the producing assets. I went down here and clicked on overrides. Okay, so we're gonna click on overrides. We're gonna click off producing. Okay, map of the United States, great. So let's zoom in to the Permian Basin around Midland and Odessa, Texas. This asset near Andrews, Texas caught my eye. It's a 0.16% overriding royalty interest for a gross production of 258 oil, 1,134 MCF per day of gas, and they actually give you your net cash flow, $5,000 per year. Now, I want to show you in Simple Petro how we can back calculate and get this net cash flow of $5,000 per year, and also give you a bid value if you're going to bid for this asset. So I've got this on one side now. You can read it. They tell you the production. The production is 258 barrels of oil per day and 1134 gas. Great. Is this property a working interest or royalty? In this case, it's a royalty. Next, you have to have it. If you're a royalty owner, then you have no working interest. The form already tells you that it's a 0% working interest, but your net revenue interest, it's given here. Now remember, it's 0.16%, and this is in decimal form, so it'd be 0.0016. So that would be converting the percent to a decimal. Now we're on to oil price. Oil price is pretty easy to find. Now out in West Texas, I think it's safe to use WTI. So what I did is I went to Bloomberg.com, markets, commodities, and it's given on a daily basis. So WTI today, $43.32, and gas, natural gas, 3.02. So I'm going to run with 43.32 and 3.02. Let me just double check, 43.32, 3.02. Okay, great. So those are the two commodity prices. And then severance tax, this is Texas, but I think to be safe, since it says cross region, various counties, I'm going to be conservative and use the gas severance tax. Now, our software just assumes that you would take the highest severance tax to be conservative. And in this case, I think it's the safe bet. Since it says multi-state cross region, I don't really know what that means, and PLS doesn't give you a lot of information for free. So we're going to roll with 7%, once again in decimal form. As far as transportation costs, this is West Texas. It's near Midland. Probably not too expensive, so I think we can use a middle estimate of 2.5 for oil, and let's go ahead and use 1 for gas. Once again, you could do some more research to differentiate. This is all based on your location and how remote the location is and what midstream contract you have. We're on to our last inputs, and this just fills out the report for you. Once again, we export the results and manually send you them, and it's in a fully professional format. So if you don't fill in fields here, then your report's going to have blanks. Read, engineer, my company name, Simple Petro. I'm going to call this RR6056PP. This appears to be the identifier through PLS if I want to find it again. And I'm also just going to put Texas royalty just as a reminder. You can call your projects whatever you want. I'm going to say Texas, appears to be Andrews County. Once again, just wanted to fill out the report. I think multiple. Permian is safe to put for formation name. We're not really sure. And then I'm guessing that they're verticals. Once again, just trying to fill out the report so it looks nice. All right, I'll show you the report. All right, so here's the example of the free report you'll receive from us via the email that you provide. Now we have two figures here. On the left is the total bid value that we would recommend bidding for this royalty if it was for sale. So in this case, we recommend a low bid value of $22,000 and a high bid value of $36,000. That would be a one-time fee that you should be willing to pay for this royalty. Now the upside on the royalty would be if the operator decides to drill additional wells on your acreage. Obviously you wouldn't have to pay for them since it's a royalty. Now the downside could be oil price decreasing. So if it goes down to say $30 per barrel, which would be terrible for the industry, then you would obviously receive less revenue. So this is a hedge on the $43 that we put into the project. Once again, we're using a flat price. So if you'd like to, you could run multiple free reports if you want to try different oil prices. And this dollar per BOE per day, it can be used to gauge value of production throughout the whole United States. So in this case, we're saying that the value of this production is between $30,000 and $51,000 per BOE per day. This is about on line with the rest of the United States. So we feel good about this report. Hopefully this was an easy representation, how you could get a pulse or a quick check on the valuation for oil and gas assets using completely free online resources like PLS and like our software, Simple Petro. Thank you.